Hi everyone, in this course you are going to learn how to use the inside bar candlestick pattern as a confirmation signal when trading supply and demand zones. An inside bar is a two candlestick pattern which indicates price consolidation. It consists of a mother bar, which is the first bar in the pattern, followed by the inside bar. The inside bar pattern shows a pause or indecision in the market. When this pattern occurs in a demand or a supply zone, it should be taken into account. Look at this example. This is the US dollar JPY daily chart. As you can see, this is a rally, base, drop, supply zone. The move is quick and strong. The candles are big. The previous support level is broken. The zone is fresh. And the risk to reward ratio is good. The basing candle is this doji candlestick. So to draw the zone, you draw the proximal line at the lower shadow and the distal line at the upper shadow to get this potential supply zone. When the market retraced back to test this supply zone, we have this nice inside bar pattern. The formation of this inside bar gives us an important information. The market is in an indecision phase. The breakout of this pattern means that sellers decided to push the market lower. So when you spot like this pattern in a supply zone, you should enter after the breakout of the inside bar or the mother bar. The stop loss should be placed above the distal line and the profit target is the next support level. Let me give you another example. This is the US dollar, Canadian dollar for our chart. This is a rally, base, rally demand zone. This zone is very strong, as you can see. But let's make sure the zone respects all the factors that characterize a quality demand zone. As you can see, the move is quick and strong. The previous resistance level is broken. The zone is fresh and offers a good risk to reward ratio. This pin bar is the basing candle. So to draw the zone, you draw the proximal line at the nose of the candle and the distal line at the lower shadow. As you can see, when the market retraced back to test this demand zone, it was rejected and formed an inside bar candlestick pattern. So now you have two important informations. You have a very strong level, which is this demand zone, and you know that buyers and sellers are in an indecision phase. So you have to pay attention to this price action pattern because the market will follow the inside bar breakout direction. So after the breakout of the mother bar or the inside bar, you should place your buy order. Your stop loss should be placed below the distal line and your profit target is the next resistance level. Look at another example. This is the Euro US dollar daily chart. This is a drop, base, rally, demand zone. Let's qualify the zone. So the move is quick and strong. The candles are big, which indicate that there is a bank or financial institution behind this move. The previous resistance level is broken. The zone is fresh and the risk to reward ratio is good. So right now everything is alright. The basing candle is this inside bar. To draw the zone, you draw the proximal line at the close of the second candle and the distal line at the lower shadow. So as you can see, when the market retraced back to test this demand zone, prices formed a nice inside bar. So to enter the market, you place a buy order after the breakout of the pattern. Your stop loss is below the distal line and the profit target is the next resistance level. This trade provides us with more than 3-to-1 reward to risk ratio. So this is how we use the inside bar candlestick pattern as an entry signal in combination with supply and demand zones. See you in the next lesson.